Hey everyone, John Henry here from School of Trade. Today we're going to be taking a look at a setup on the S&P 500 coming off of channel highs. I'm looking at taking a short at 2,000 and a quarter. Talk about big round number. We've got 2,000 directly underneath us, which can definitely be a potential issue in terms of trading around those big areas. It's always a little bit more difficult to trade around those big round numbers. So I'm not going in with a very large size. I'm only going in with 3, looking for the move down. First off to 94. That's going to be our major first target area. So 2 contracts coming off there. And I'm going to go to 94 and 3/4 to get the front run going there. And then after that, primarily looking back to the low of day, and we do have a strong area of support coming in at 89 as well. So 89, it's an area that we've been talking about in the chat room a little bit here, and that seems like a perfect place for me to want to take my profits. So I'm going to go ahead of that at 89 and 3/4, right back down at the exact low of day, and that should be able to give us enough room back to the downside as well as get filled ahead of a major area of support. So in terms of the way that this is setting up, it's setting up absolutely beautifully. We have a gorgeous move down, relatively range bound on the day, but that being said, we are forming a nice bear channel working its way lower, and this one really proves it right there. They kind of put the nail in the coffin, if you will, and dropped it back down. Beautiful bear rejection off of those channel highs, and now we're looking for them to rotate back down to the channel lows. So first target down at 94 and 3/4 from our entry point here at 2,000 quarter. We're looking at a 5.5 point move. After that, we're looking back down to the low of day at 89 and 3/4 for a 10.5 point move. So lots of profit potential built in. We just need to see the market kind of step up and continue this drop lower. If we start seeing some signs of failure, because it is a range day, if we start seeing some signs of failure where the buyers want to pick this back up, we could easily see the market want to go back up to these highs. So any sign of potential failure here will definitely clue us in to get out a little bit early with the profit that it'll allow us, just to be on the safe side. So right now, everything's looking great. We just need to see the sellers continue this down move, and hopefully we can get our target at 94 and 3/4. All right, well, the buyers did look like they were going to try to come in, but now they look like they all but gave up there. There we get the target filled. A beautiful move down. Now we're looking for a little further continuation here. The next area or objective that we're looking for is back down to 89.75. We are holding this area of support at 94, which is exactly why we wanted to get our target filled ahead of that. Now, I'm going to leave my stop at 2,001 quarter, primarily because that's the last time that we saw the buyers really try to come in here. Now, that small little bull candle looks like a lot of people took that just because the risk is really small. You know, maybe got a point scalp out of it, something like that. But the fact that it wasn't able to close past our entry point, I think, is a really big clue. And I think a lot of sellers took that to their advantage and they dumped it right back down again. So massive selling pressure coming back in. Now we need to see the sellers continue this drive down. Since this is such a strong bear candle and we're closing smack on the lows, I really don't want to give anything back. So now my stop will go to break even now that we have a little bit of extra proof. So 2,000 and a quarter is my stop. I will look to lock that down a little bit closer, but this is kind of the issue that you run into when the candles are so big. You can't really get your target closer because the candle is, you know, a 7-point wide candle. So you just kind of have to work with what the market will give you. Right now, 2,000 and a quarter is the safest spot for our stop, so we'll leave it there. But if we do get some clues that, you know, as we get closer to the bottom here, knowing that there's support at 89 even, if we start getting some bouncing there, it'll be a pretty big clue to potentially close early as well. So we had a little bit of a scare with this attempt back on us, but they kind of clarified that pretty quickly on who had control. So now we're just looking for the sellers to finish the job, get back down to that 89 support area, get our target at the low of day at 89.75, and we should be good to go. Everything's still looking really, really good, especially now that we're closing and breaking underneath that 94 support. That's what we want to see. Now it's just up to the sellers to try to push. Sellers pushing very strong. 1 tick away from our target. Was going to lock the stop in. Guess it doesn't really matter. So we'll close that, and we get the target filled. Gorgeous move down, bouncing right off support at 89 and a quarter and right off of 89, exactly where we anticipated support coming in. That's why you front run those levels, my friends. That is exactly why. So we get our target filled. Gorgeous run down. That's 1,075 on the trade with only 3 contracts. So because 1,075 at 12.50 a tick, that's 86 ticks on the trade, and can't really ask for a much better setup than that. So that's going to do it for me. I'm going to call it there. If you have any questions about it, feel free to send an email to School of Trade. Don't forget to check out our trial at schooloftrade.com, and as always, we'll catch you next time.